Good Business San Diego.
Thank you for watching Good Business San Diego. Next up, we welcome Dawn Hall Cunneen. She is an attorney with the local law firm Cunneen Booth, a firm that specializes in the areas of trusts, estates, and business issues. Today, we'll talk about changes to estate tax laws that could have major financial repercussions to many families. We're about to find out how many. Dawn's here with some insights and advice. So, Dawn, you know, when tax laws change, it's complex enough. But when you get into something like estate tax, there's so many different variables. But one thing people should be aware of is this is going to impact so many people. Talk about the change that's coming.
It is. So currently, you can pass a little over $13 million per person between lifetime gifts and death-time transfers. As of January 1, 2026, that number drops to $5 million indexed for inflation. And the estate tax is a tax that's charged on everything you own, and it's a 40% rate.
40% is the first thing to be aware of. We're talking about some significant money, and then that threshold going from 13 down to
$5 million index for inflation.
Wow.
So it's going to impact almost everybody in Southern California, quite frankly. If you own a home, you have a life insurance policy and a retirement account, it's very easy to get to that number.
So let's talk about the assets that are subject to this tax and will be moving forward. So as you say, it's real estate that's really going to push people into a very dangerous situation for future taxation, right?
Correct. The tax is applied to every single thing that you own. Jewelry, clothing, real estate, life insurance that's not in an irrevocable life insurance trust, retirement accounts. The estate tax is all inclusive.
And that won't change moving forward in terms of the assets themselves, just the amount is going significantly lower. I mean, really half of what it is now, right?
Correct. That's correct.
Wow, scary. So what do we do preemptively moving forward? I know we're talking about maybe some legislation could overturn this with this provision kicking in about a year and a half.
Correct. So I think the most important thing to do right now is to write your representative and ask them to extend the sunsetting provision. There have been many efforts to rewrite this law, all of which had failed given the lack of ability to come to agreement in Congress.
Yeah.
But it's easier to agree to just extend the deadline. So I suggest people write to their elected officials, ask them to extend the sunsetting provision and allow it not to sunset on January 1, 2026.
Because there is precedent for this. It could happen.
It could
that
happen.
It might get extended.
Correct.
Right? Okay.
Correct.
But anticipating that it may not, what's your advice to people watching?
So you can make gifts, annual exclusion gifts that are outside of that exemption, $18,000 per person.
Right.
You can pay unlimited amounts for tuition and medical expenses for third parties. You can create irrevocable life insurance trusts to take the life insurance out of your taxable estate. Yeah. So there are many tools, but they're quite technical and certainly not something you should embark with, without legal advice.
Well, and definitely not a one-size-fits-all. I mean, it's so individualized from one family to the next, right?
Absolutely.
So that's where you need the guidance of a firm like yours, right? So this is what you do?
Right. This is what we do, and there are many great law firms in San Diego that people can reach out to and get the help that you need, because the 40% rate is very significant.
Oh, absolutely.
You want to protect your wealth for your family.
Yeah, better get started today, right?
Yes.
Absolutely. Thanks for coming in and sharing the information.
Thank you.
Come back and we'll see if we can get this extended. The website for more, CunneenBooth.com. We'll be right back with more.